Hello and welcome to 11FS Spotlight. I'm Amy Gavin. In this weekly show, we shine a spotlight on the best and the brightest in the tech and financial services industry to try and understand what gets them going, growing, and what they think the future of the industry will look like. On today's Spotlight, I'm delighted to be joined by Anuj Nayar, VP, Head of Communications and Financial Health Officer at LendingClub. How are you doing today, Anuj?
I'm great, thanks, Amy. How are you?
All good, thank you. On today's show, we're going to talk about Anuj's career and take a deep dive into the process of building a holistic customer experience. What does it mean? How do you approach it? What does it improve? And why should we be paying attention? Let's get started. So, to kick us off, Anuj, can you give us an elevator pitch for Lending Club?
Yeah, absolutely. We're the first and only what we call a digital marketplace bank in America, which means kind of reimagining banking from the ground up for everyday Americans. So our core customers are not the underbanked you hear a lot about with neobanks. These guys are high income, they have high credit scores, but over time they've just built up a lot of debt, right? And these are the people that traditional banking make the most money from. It's just working out better for the banks than the customers. And our goal, and we've been around since 2007, is to use technology to lower costs and improve that customer experience we want to talk about later on today. Because we started with lending. Lending marketplace is what we're known for because it's kind of the hardest part of consumer finance, right? And that drives down the cost of credit to consumers. And about 8 months ago or so, we were the first fintech to buy a bank, to buy a US bank. And that gives us the ability to do so much more for what our customers are looking for. So the kind of full suite of digital banking products we'll be able to offer them over time.
Great. And can you tell us about your role at Lending Club?
Yeah. I have a great role. I have kind of like two hats. I run the communications team, which obviously looks after, internal and external communications, social, all the things you think about when you think of head of communications. But I'm also the financial health officer at the company, and that is about kind of holding the company accountable to our mission, which is to empower our members on their path to financial health. I call it being the company conscience in a lot of ways. So like I'm the increasingly companies can't have a brand that isn't absolutely authentic, and we have a huge mission ahead of us. So we try and do that because I mean you see all these things about financial health. A lot of companies talk about financial health, and it's a bad thing. There's more than $1 trillion of credit card debt. Americans are struggling financially. And they're having trouble getting out of this hamster wheel of debt. And we think there's a huge opportunity to do that. But you've got to be driven um, against your mission, right? And that's kind of my role is internally and externally to hold us accountable to our mission.
Interesting. And what's led you into that role and that role as financial health officer?
Well, I actually started in the UK. I'm a British and American citizen, but I moved to the US in 2000. I joined Apple in 2003 and then PayPal in 2008. I mean, I love working at these companies that are going through huge transitions. I mean, Apple and PayPal today are very different from the companies when I was there, but I like to think I was part of the teams that played a part in helping them transition to the powerhouses they are today. I mean, if you told the Anuj who joined Apple in 2003 thought he was joining, his favorite tech company, that he would be working at a bank 18 years later, I would have laughed in your face. But in a lot of ways, kind of banking and fintech is where the internet disintermediation action is today. I mean, you think about kind of the internet was huge in the 90s and 2000s, and I was working in a number of companies there at that time. I was very lucky to be at Apple when we launched the iPhone in 2007, and that kind of kicked off this mobile revolution you're seeing. And now, you're seeing this kind of next generation of the Web 3.0, with everything becoming a fintech company. Payments is being built into the very kind of nature of the web. You've got all this artificial intelligence stuff that's fundamentally changing how people are working. And I think some of the most interesting areas where that's happening are in financial services and in health. These are areas that haven't really been affected by the internet the same way that the taxi business has or the retail business has. So it's a fascinating place to be right now.
Yeah, absolutely. And so you mentioned there a bit of background in tech, moving into financial services, but was there anything else you had your eye on in those early days of choosing a career?
Well, that's a good question. I went to Manchester University in the 90s, and I don't know if you remember this, but this was the days of the Happy Mondays and the rave culture. It was like the center of club culture back in the day. And I used to help run these really fun student club parties. And I remember being at university and sitting there and being like, I love this. I want to be a club promoter. But as you sit there and you think about that in the dull Manchester light of a Monday morning, I'm like, I don't think my parents are going to go for this. So I stayed on. I got a postgraduate degree in public relations and then started working in technology PR. So that was the big thing. I do remember sitting there at, 18, 19, being like, which way is my life going to go? And I have to say, I'm very glad I took the path that's brought me here.
Could have been a very different life story.
Would have been a very different life story. Let me see. I'm 48 years old. I probably may not have been around if I'd taken that club promoter life by 48. But as it is, I worked out well.
To move on then, to talk a little bit more about LendingClub, and the bigger picture on how LendingClub is building this holistic customer experience.
Maybe so. Just kind of talk to you a little bit about kind of what a holistic customer experience is. Is that the question?
Yeah,
Yeah,
sure. So
yeah,
maybe for listeners who are not too familiar with that term, if you could give us an overview of what it means to you and your
yeah,
role within
yeah.
that.
Well, before I talk about the customer experience, and I kind of like take a step back and talk about kind of how do you get there in the first place. I mean, uh, for many people, finance is there's a lot of jargon in finance, right? But it's actually much simpler than most people think, right? There are factories that make products. These are banks holding deposits, investment managers making investments funds, lenders and insurance underwriting customer risk with capital, right? So that's kind of the factories. That's the back end. Then there are the stores that sell the product, right? Traditionally, it was bank branches, financial advisors, insurance salesmen, lending officers. Over the last 20 years, obviously, it's increasingly becoming digital, right? In between, there's all these complex value chains of humans, balance sheets, and software woven together by regulation and industry habits across the board, right? But if you think about it and you break it down, finance is not that different from other things. Clients visit a store, visit a front end, and they buy some financial product that is then delivered by something on the back end, right? Now, what you're seeing right now, and this is why I'm so interested to be in kind of retail banking and consumer finance at this particular moment, is finally through a whole range of different things coming to board, like mobile, AI, regulatory changes, like digitization is happening across that value chain from the back to the front, right? This means putting the customer at the center, not the products and services. So um, what you've got now is in the same way that if you go to a store and it doesn't have that full front to back end, you can only buy in the store what the manufacturers are making. It may not be not what you want, but it may be exactly what the manufacturer wants to sell you, right? And now you've seen many companies in many industries kind of change that modeling, right? So you think about I buy my glasses from Warby Parker, right? They're a direct to consumer brand that has built the whole value chain up from the back end to the front, right? And they are fully set up around what's gonna mean for the customer. And that's what we think is going to happen in banking. That's where that idea of the customer experience, this holistic customer experience, comes from. It's not being at the front end and just selling the products to the customer that you've got on the shelf that somebody else has created. It's going all the way through the value chain, right the way to the beginning, and building this. They call it vertically integrated, but that always sounds like such a complicated term. It's basically creating stuff that the customer wants and delivering it at the time that the customer needs it at the best possible price.
Makes sense. So it's about that end-to-end value chain. And what would you say are the common mistakes companies make when they're trying to execute a strategy like that?
I mean, the biggest one is it's hard, right? Because what you've got to do is you've got to, well, number one, you have to be a bank. So there's a lot of companies that have created beautiful front ends. I mean, they look gorgeous. They run on your mobile phone. They look wonderful. But at the end of the day, they're a front end to a partner bank, right? It's a traditional bank that's actually doing all the things that are behind it. And that doesn't allow you to really change the experience for the customer because you're the front end. In that analogy I was talking about earlier, you're the retail store, but you're not the factory. And so you can't change what's being produced. You can just, make a prettier shop front to sell those things. And what's happening in retail banking that is super exciting is a few companies, LendingClub being one, are recreating that whole value chain from the back to the front. So you're the factory, you're listening to the customer at the front end, you're walking into that front store and customer saying, this is what I want for my financial services. And then you're going back to the factory and creating it and delivering that to them in a way that is massively personalized too. It's not, I have these 5 products and you get to buy this one, Amy. It's what do you need right now to help your financial journey get better? It could be I'm looking for a specific way to save money, or I'm not looking to save money. I just want to lower the cost of my debt, but I'm happy to carry debt. And all these things can start to build up, and you can start to build a kind of like a personalized program for each individual person to make their lives better. It's hard. It's hard because it's never been done before. And this idea of a one-stop shop for financial services has been talked about for a very long time. But the reason it hasn't been done yet is because there's so many barriers to do it. Technology barriers, regulatory barriers, financial barriers, et cetera, et cetera. But finally, I think we're getting to the point where it's going to happen.
And is that personalization aspect a core part of LendingClub strategy then?
I think it's going to be a core part of every banking strategy eventually. But yes, that's absolutely it. Because people don't like their banks, Amy. Let's be honest, right? People don't like their banks because they try and sell you product. You look at this, and there's some very large corporations. I'm not going to name them, but in the U.S., and anybody that follows this will know that were held to account because they were basically selling people products they didn't want. Sometimes they didn't even know about. And because the bank's interests and the customer's interests have not been aligned. There was a series of regulations called Dodd-Frank that came up in the US in the 2008, 2009 after the last financial crisis. It changed the nature of how banks make money. And they started changing how they operated stuff. And frankly, their interests and the customer's interests have never really super been aligned, but they started to move further and further away. And that's what opened up the opportunity for fintechs, frankly. They were like, look, there has to be a better way to do this than the way that the banks are doing it. And let's use technology. Let's use these things to come in to do this stuff. That was the beginning, right? That's where you started to do this stuff. But the holy grail of finance is kind of the Uber experience of finance. What you want to do. I don't need to be, right now, finance is unnecessarily complicated. I have a checking account, I have a savings account, I have an investment account, I have a credit card account. I am charged with making sure that I'm making my money work best for me, right? There are some companies that put a nice front end on it and a dashboard like Mint and some of these others, like at least you can all see it in one place, but no one's taking control of it for me. No one's kind of being the active partner to make sure these things happen. And that is, frankly, I mean, as a consumer, that's what I would love. Look, here's my money. If I've got a little bit of money and I'm not using it, get me the best amount of interest I can. And then when I need it, get it to me. And here's my debt, and do the same thing. And just I trust you to look after it so that you're doing all the right things for me. We're not there today. Nobody is doing this today. But I mean, the power of what that will be like once you can get that moving is incredible. And back to my factory front end analogy, in order to do that, you have to be both. You can't just be the factory. You can't just be the front end. You've got to be all of it because you're trying to create product that will allow that to happen for Anuj, different than what's going to happen for Amy.
Yeah, makes sense. And you say no one's there yet, but are there any brands you can think of that are close in the financial services world?
No, there isn't. At least, and the closest is in China. You start to see a little bit more integration because people have moved a lot more to digital banking in China. There are some other issues around that, and I'm probably not going to go into on this podcast. But there's nobody in Western Europe, and there's nobody in the US that's even close yet, because it's hard, right? Because not only have you got to rebuild the technology stack from the ground up. So the banking technology stack has been built around products, right? It's been built around, you have an investment product, you have a checking product, you have a deposits product, you have a savings product. You need to recreate that entire thing from the ground up to be about the customer. You have Anuj, you have Amy, you have George, you have Ringo, right? The point being, once you create that customer focus as opposed to the product focus, it changes everything. But that is a massive difference for how banking has been created up till now, and that's why it's taking time, and that's why it's hard. Frankly, that's why it hasn't happened yet. I mean, you look at pretty much every aspect of my life has had a major shift due to the internet, right? I mean, and that's been accelerated over the last year and a half as we've all been living, working, and doing everything at home during COVID. But banking really hadn't until now, right? I think you've seen the studies, like, there is a massive acceleration that's happened over the last 18 months for this move to digitization, which is the first precursor to doing all this, because until you've digitized, you're not going to be able to create that customer focus. And then the other thing that we're seeing is just the massive increases in back-end technology, so machine learning and artificial intelligence and those kind of things that are driving so much of this. I mean, LendingClub's been at this for a long time, right? We've been doing the lending side of banking for 14 years at this point. We have like 150 billion cells of data on $68 billion worth of loans built up, since 2007. That data can be used with some of the latest machine learning and AI technologies to do what is really necessary, which is kind of go beyond what people are looking at now to accurately price credit risk and then make that work for the customer, right? The FICO score, which is what we use in the US here, is a 70-year-old technology that's built around the fact that everybody has a regular job that pays the same amount of money each month, and that's kind of it. And you don't have that anymore. You really don't have most people don't live that way. And there are other ways to manage that technology, ensuring that you also don't accidentally cause disparate impact. That's the other piece of this, because sometimes when you start doing these things, there's a few high-profile companies in the US that have been caught out by using technology without thinking about the actual effects on their customers, and have realized that some of the algorithm changes they were making were not helping everyday Americans. And they were, in fact, in the one case I'm thinking about, they were inordinately charging higher credit to people that went to historically black colleges, because that was one of the things that they had in their algorithm, and that's just wrong. So you have to manage that process too. You've got to manage the technologies and then the regulatory environment, right? I mean, it's people's money and people's health. As a citizen of the US and a citizen of the UK, I'm very happy that the government spends so much time looking after my health and my money and making sure these things are there. But as you're trying to do something new to innovate, it is more complicated, and that's why it's taken so long to come to fruition.
Yeah, absolutely. There was that interesting case with the Apple Card, wasn't there, where they were thinking that maybe the scoring model that sat behind it wasn't quite.
I remember that.
fair.
I remember that. Yeah, this gentleman and his wife got very, very different interest rates, I think, and limits, right? And I want to say it was like a 2-year study that finally came out, I think earlier this year, that said, no, it was just an accidental thing, but this is what you've got to worry about because you're dealing with people's money, right? And you're using technology to deal with people's money, and the impacts of that have to be thought through. There is a consumer advocacy group here in the US called the NCRC, and we were part of a group of digital banks and lenders that kind of have been working very closely with them to kind of try and get Congress to put in the guardrails to ensure that when you're talking about AI and financial services, you're also managing for disparate impact. And these are the things. This is why it's so complicated. This is why it hasn't happened yet. Is you've got to be thinking about this stuff, right?
Yeah.
I mean, it's not ordering a book on Amazon. It's not ordering a taxi on Uber or Lyft. It's dealing with my retirement, And I want somebody to be very, very careful about how they're thinking about all these things. And it's complicated. And this is honestly why we think our strategy of actually becoming a bank versus just being the front end, just being the store and not the factory, we don't think that's how you're going to be able to drive fundamental change. We think you need to have that vertically integrated value chain from the back end all the way through to the front end, and building the technology so that the customer is at the center, building all those things on top of it so that personalization of product is at the center. Because there's a dirty word in banking. It's not a dirty word. There is a word in banking they call cross-sell, right? And banks cross-sell you products, right? That is not necessarily in the customer's best interests. What I want is you to offer me the product I need at the right price at the time I need it, and not just market to me anything that you're trying to show me at any one point. And that's kind of where we think we've got a huge opportunity, because we have a very clearly defined customer base, right? I mean, we offer loans from everybody from 18 to 80, but the vast majority of our customers are they've kind of built up a little bit of debt. So they're not 22-year-olds, right? They are in their 30s, 40s, and 50s. They're relatively high income. They're about $100,000 in income, relatively high FICO. They're kind of like low 700s, but they've also carrying debt for multiple reasons. You know, they've had a problem, all the reasons we build up debt. And this is a group that is not, desperately trading Dogecoin. They're not like, please get me a new crypto trading currency. They're just like, I need some help to better manage my debt and my savings so that I can either get myself out of debt or just pay less on my debt and improve my financial health and whatever is my ultimate personal goal to make that happen, so that I'm moving forward to my financial goals, right? And so this is kind of why we've got a very clearly articulated roadmap for what we want to do, because we've got a clearly articulated customer, and we have almost 4 million of them already, right? 3.8 million customers that have used LendingClub services, and we want to use this data and technology powerhouse we've built and this marketplace model that's been proven so successful to marry the lower cost of debt with the best return for investors, and then add the banking capabilities that we've got now to build this up from the ground up. It's a very exciting time to be in banking, and I never thought I would ever say that. I was like, that's a phrase I thought, back to my the Anuj at Apple in 2003. There's no way I would ever thought that 18 years later I would say something like, "There's a very exciting time to be in banking."
No, absolutely. Things are changing fast. And if you had to identify three things where the customer experience has changed, say what the customer experience looks like now versus what it looked like 5 years ago, what would those three things really be?
Oh, that's a good question. I mean, the first one is the move to digitization, right? So the first one is physical to digital. That one is so clear. I mean, it was happening already, but I mean, I live in San Francisco, so we're opening up again. It doesn't feel normal, but it's definitely better than it was a year ago. And I have loved going back to a restaurant, going back to a bar, going back to, a concert. I'm going to this concert called Outside Lands this weekend. I'm so excited to go back to that. I don't think anybody was like, I'm really excited to go back to a bank branch. I've been really wanting to walk into my local bank branch. Nobody's saying that, and nobody will do, because they've moved everything onto this thing, right? I mean, they really, really have. So that's the first one, is to move from physical back to digital. The importance of kind of know me, this personalization area that we're starting to see. I'm so used to it in so many different ways, but my banking services are just now kind of getting that opportunity to be really know me, and that's driven on data, right? Because there's a lot of different pieces of data, but building up like a holistic picture of Anuj and Amy is going to be different, and that is the other kind of piece that's really driving this thing. And then the third one, let me think about this. I think it's the expectations of customers. I was very happy 10 years ago. I wasn't happy, but I lived with it. I lived with the idea. This is not even just in financial services, just generally. I'm like, it's a terrible company, but their product's fine, right? I don't think you can do that anymore. You can't be an inauthentic brand. You've got to actually be a brand that people look at and say, yeah, okay, that's fair. I can see that. I mean, you're seeing outside of financial services, you're seeing Facebook go through this now. They're going through like a crisis of confidence of like, what do they stand for? Because I don't think Mark Zuckerberg and the team meant to create something that is being seen as being, hugely pernicious to society. It's just kind of like they wanted to connect people, but the realities have been very different. And you're seeing that kind of come through. That's the highest profile example of what I'm talking about there. So move to digitization, move to personalization, and importance of consumer expectations of what I'm calling authentic brand, but those would be the three.
Yeah, that makes sense. And I suppose you could argue now that with that brand point, if customers are dissatisfied, it's a lot easier for them to switch. They can switch away. There's so many
Oh
other
yeah,
options for them. So brands that don't get it right,
I mean,
they learn the hard way.
and it's not a winner takes all situation like it used to be, right? I mean, it used to be the reason you didn't move your bank is because it was so hard. Moving everything was just, I mean, you had to really hate your bank before you would do that because it was such a terrible, terrible process to do that. And now it's not that difficult. I recently changed my bank from one of the larger kind of traditional banking things, and it wasn't that bad because I realized most of my stuff goes through intermediaries, right? I mean, a lot of my payment stuff already goes through PayPal, so it wasn't like I had a direct deposits I had to change. My everything is digital. I kind of moved my salary, moved some of those other pieces into a different banking system, and it was not terrible. It was, it wasn't the easiest thing, but it definitely, it started saving me a lot of money, and you're going to see more of that. I think the other thing you're going to see, which is, I think, a big change, is people are going to have more than one bank account. I think, and traditionally, you've only had one, right? You've only had one. You've had your bank account. It's the one you opened at 18, and you kept it for your entire life. And I think one of those things, back to that consumer choice thing, is you're going to have different bank accounts for different needs because it's easier to move your stuff around. And so that's going to be something I think we're going to see grow a little more over the next few years.
Yeah, that idea around the utility bank account and then the bank account that you have for your discretionary spending and your day-to-day payments and entertainment spending and all those other things.
Exactly. I mean, I was at PayPal for a long time, right? And people use their PayPal or Venmo accounts as their slush money, their disposable account or whatever they had. And it was interesting. You see that process, but back to my original point, you still want to be able to. You shouldn't have $1,000 sitting in an account doing nothing for you ever, or $10,000, whatever the number is. Like that's just not smart, right? If you can be making money on that without you having to spend all the time to move it around, obviously you want to do that, and that's kind of where we're going to get to. So it's going to be an interesting. I think it's going to be a 5-year journey. I don't think it's going to be a 10-year journey before we start to see this really come to life. But it's going to be massively disruptive to how people think about consumer banking, which really hasn't had a major upset like this since the 1950s, I would say.
Yeah, yeah, absolutely. And thinking you have obviously had a lot of experience in this and how Lending Club is approaching these sorts of questions and problems. And what would you say you're sort of most proud of in your time at Lending Club and how you have helped manage to address some of these changes in the customer experience?
Oh, that's a good question. I think it was a transformation that we went through to be changed from a lender to a bank, right? I mean, we were the first fintech in the US to buy a US bank. I mean, this is kind of, dog bites man, not a news story. Man bites dog, massive news story. And that was something that you hadn't seen before. And it was such a pivotal moment for the companies. Like, it's not hyperbole to call it transformative for us. And going through that process, I mean, we announced the plans to acquire the bank in February of 2020, right? And it was super exciting. And then a month later, everything closed down. So we closed the acquisition, and worked with all the regulators. That's the big thing for bank acquisitions. As there should be, there's a huge amount of regulatory oversight. Working with the OCC, working with the FDIC, et cetera, to do all that stuff during COVID and still manage to achieve it in less than 11 months was huge. It was a massive, massive win for us, and it was actually driven a lot by the help we received from our consumer advocacy groups. So um, normally when you see these things happen, and you're seeing this happen to some of the other fintechs that are trying to um, get a bank charter in the US. I think Monzo just pulled out, Revolut just pulled out because the consumer advocacy group said, we're not sure if these guys are on a customer's side. I'm not sure. I'm not sure if we were the first, but I think we were one of the only acquisitions that went through without any consumer advocacy groups putting up an objection because of the value that we've already brought to everyday Americans on that kind of credit side. There's like Federal Reserves talk about how we've helped Americans in what they call banking deserts where bank branches have closed. And there is so much data to show how we objectively help underserved Americans, so Black Americans, minority Americans, in order to help them get loans at a decent price, and that all those things help as you're getting into this process. So that just the getting the bank license, getting the bank charter, getting the approvals to create this pivotal, very different type of reimagined banking architecture, something I'm personally very proud of. The team did an incredible job to pull all that stuff together.
A huge achievement for sure. And as we're coming towards the end of the show, we wanted to wrap up really by asking you maybe one last question, which is a little bit more of a personal one, but you can answer it however you like, related to fintech or not. But what advice would you give to your younger self?
Ooh. It's a great question. I think I I grew up from, obviously I have Indian parents. They were small business people, and they were small business. My parents had a convenience store, then they had a travel agency. So I have been kind of working since I was a little kid, right? And my parents instilled in me something that I think has held me in great stead. Is like, if you just chip away at something every day, you can achieve incredible things. But just don't be scared about the mountain. Just look at the next step. I know it's a cliche. I know it sounds so cliche, but it's so very true. If you can just take it day by day and start working through stuff, and you can look back and you'll be amazed at what you've achieved. I mean, I grew up in Hounslow, and I look back and was worked very hard, and I don't think I would ever thought I'd be, on a Zoom call with Amy in the UK from my apartment in San Francisco with the financial health officer of a publicly traded company at that time. And you don't know what you're going to achieve if you just kind of plug away at it day by day. Not a very inspirational answer, but I do believe that.
Oh no, I love it. I think that is absolutely, and you've proved that can happen. You can be on a Zoom call with Amy at this time. You've made it.
Oh, there you go. The pinnacle of my career, Amy. This is absolutely it. This is the pinnacle.
So no, thank you for that. And just before we finish off, it'd be great to hear what's next for LendingClub.
Oh my God, we have so much ahead of us now. So, I mean, as a company, we've been known as just this provider of personal loans, and we're now integrating all the banking up and stuff in there to start to offer our customers so much more, starting with other lending products, right? We just had our earnings call very, very recently, and we're talking about how we're building the same banking architecture so we can do what I was talking about, start to personalize those offers, starting with things like auto refinance. So, half of Americans don't realize that they can auto finance their car loan in a different way. And that can save you like $80, $90 a month, like that, with a couple of minutes work. So starting to do some of those things, you start to look at the new services that we can personalize to offer you as you go forward, and then building from that to that full suite of financial services that will eventually get us to this, this holy grail of active finance, where I don't have to think about what my money is doing. I know that LendingClub is going to take care of it for me and move it to the right places, whether I'm carrying debt or whether I'm carrying savings. I'm going to be able to know that the company is doing the right thing to benefit me because it also benefits them. And that's just a super exciting time to be looking at this, because it's what everybody wants, but it's hard to do, and we think we're in a unique position to make that happen.
Thank you. Well, we're definitely excited to see what comes next
Well,
for
thank
you.
you.
And okay, so it's coming to the end of the show, and thank you, Anuj, for joining me. It's been a great conversation. Where can people find out more about you and everything that you're getting up to with Lending Club?
So Lending Club is www.lendingclub.com. You can find me on LinkedIn. I think it's ANUJ NAYAR. It's probably the easiest. Or on Twitter at Anuj Nayar.
Brilliant. Thank you very much.